From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 15th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. And as always, be sure to use appropriate risk management strategies as in all trade setups. So let's get started here on the USD CHF, the dollar franc. We're looking at the daily time frame, some significant levels that we want to pay attention to here on this time frame, specifically the blue shaded area here right down into the mid to low 9900s. Let's take a look at the past few days. Over the past several days going into last week, we saw the market all the way up here challenging the 1.0100 level at the top of that blue box in the green shaded area. Just since Friday, we've had a significant sell-off of this currency pair coming back all the way now into the upper 9900. So we've seen a significant pushback back underneath now the parity level. We know that resistance is close to parity or maybe just a little bit above it into the pink shaded area. And by the way, the 100 period moving average is sitting up there at 0030 as well. So we've fallen underneath all of that and we're making our way back down to significant support into the mid to low 9900s. Take a look back in time. We have seen a lot of support here before. I highlighted it with these 4 black circles, 1, 2, 3, 4, showing us support there at the blue zone. So we will likely see some support there because history shows us that we've seen support there. We've even seen resistance into that mid 9900 level. So likely today we'll see some support there around that blue shaded area if the market makes it that low. Let's go ahead and take it on down to the 4-hour time frame, and we can see there's that blue shaded area here into the mid 9900s. Let me zoom out one time here so we can see a little bit more history. We're seeing it fall back down there. We're seeing it push underneath that pink shaded area. Take a look here. Just on the open, we've pushed underneath the 1.001030 level, the pink shaded area, now falling back down. One last thing, Fibonacci from the lowest low down here at the bottom of the low to the current resistance high of that trend range, we're at the 50%, and the 618 Fibonacci retracement level lives down here at the blue zone. If you're a seller, now let's talk about risk reward for a moment. If you're a seller, you need it to go up to the pink shaded area or at least the parity level before you sell it to improve your risk reward. You don't want it to come all the way up here at the risk. So we want our risk just above the pink zone, because if it breaks above there, we're likely turning higher. If you're a buyer, you're probably waiting for it to come down here to the blue shaded area into the mid 99s to give you yourself the lowest risk, highest reward opportunity to buy it in opposing direction of the current momentum that we're seeing right now for the dollar franc. Okay, moving on. Euro dollar, we could see a similar yet opposite situation here where the franc is falling, the euro is rising, but we're into a significant resistance level. Take a look back here where the blue circle is. You can see support right there where the blue circle is. So we know there's, and even prior to that, we know that that's a significant decision point. 1.096535 is the blue zone. Last week we saw the attempt to break above it. French election news causing the market to turn back below the blue zone all the way to the orange zone and now making its way back up there again. Zoom it in one time. There it is right there. A little bit better viewpoint. We had a little bit difficult time staying above there before. Now we're trying it again. If it opens and closes, breaks out above 1.0965, I think it could be the time we're looking for it back into the 1.1000s, and the yellow shaded area up here is our next resistance. But we want to be sure of that. We want the breakout before we just assume it's going to go back up there. Otherwise, a reversal from here takes it back down to the orange zone where we've seen significant support and resistance back here where the black circles are over the past several weeks. Moving on over to the GBP USD, Greater British Pound, US dollar. Over the past 3 or 4 weeks, we've been studying a pattern. The black boxes, the black trend line, the rising congestion zones. Congestion, breakout, congestion, breakout, congestion. Then it broke out lower last week. We see a little bit of a change of that pattern pushing underneath the black trend line and that rising channel there. And now we're sitting underneath the 1.2920, 2950 level, the green shaded area. So it's significant and interesting pattern that has been setting up here. I think as long as it stays underneath that green zone today, we may be looking for a turn back lower. If it breaks above the green zone today, we could be looking for another challenge of the purple zone. So very interesting situation here. The break of the black trend line, the break of the pattern, if it stays under the green zone, we may be looking for further reversal. But we need to pay attention to that zone to see if we're going to see the breakout back above it. 4-hour time frame, take a look at this here on the 4-hour time frame. We've come back into it, settled as resistance. Here from the green zone, we're either looking for a breakout above, open and close above to go higher, or holding and some infusion of sell orders, an indication of selling pressure from the green zone could send us back down for the pound dollar this week. Moving on over to the USD CAD, look at this significant break of the pattern as well, significant push lower. If I zoom this box over a little bit, look how many days we've been sitting inside that blue box. These are daily candles, so how many days we've been sitting between the blue and the green zone. And this is now our first attempt outside of that blue box for quite a long time. We don't want to fall prey to a false breakout though, so just be careful of that. We are seeing a push underneath the 3650 level, the blue zone. We do have significant level here at 3600, 1.3570. We have the 382 of the black trend line, low to high Fibonacci, 382, 1.3575 is there at the pink zone. Take a look at the black circles on the left. Those black circles show a significant resistance there, so very likely we see at least some intraday support here at the pink shaded area, and only if it breaks underneath it, the 382 and those historical resistance, do we look for it to go lower. So intraday support here, so be careful about going short into the pink zone. If you're going to go short, you need it to come back up first, at least to the blue zone. Take it down here to the 4-hour time frame. Again, an open and close is great, but we also want to see that rally and retest to give us lower risk and higher reward. Right now, our potential reward, potential profit will be likely capped here at the pink shaded area, given the parameters we've seen there. So don't sell into the pink zone, but allow it to come back up to the blue zone, rally and retest before falling back down. So sellers, you're looking for the challenge of the blue zone, a break of the pink zone. Buyers are watching the pink zone as an area of support and potential reversal to go back up in the direction of the previous trend for the dollar CAD this week. Moving on over to the USD JPY, significant turn of events here on this currency pair as well from the previous several weeks. Take a look, the black trend line, clear uptrend over the past couple of weeks, and now we're back underneath that black trend line. Does that mean the trend has changed? Possibly, but I think we need to watch for further evidence of that. Of course, holding underneath the yellow shaded area today will be our first clue. We need to stay underneath there, create a lower high. Remember, a downtrend has lower highs, so we need it to create a significant lower high here on the daily time frame, at least here at the yellow shaded area. A push back above the yellow shaded area may be our clue that it's not going to turn lower and we're going to see another turn higher. So interesting enough, 100 period moving average sitting down here at 112.97. We'll call it 113 really. We're sitting the moving average just below the market. So if it stays above that, we could look for another turn back in the direction of the trend. Remember, if you're going to buy something within an uptrend, you want it to go down. So now we've seen that. We've seen it go down. We want to watch for clues and evidence that it's going to find support here and head back higher again, back above the yellow zone, targets the green zone. 4-hour time frame won't change any of that, but take a look at our support here at the orange shaded area. Staying here or above, potential reversal to go back up, break the yellow zone, challenges the highs. If it stays under the yellow zone, as we mentioned, we know there's potential resistance and reversal, and a break of the orange zone looks for further reversal for the US yen this week. Next, moving over to the AUDUSD, we have seen a significant rally higher here for this currency pair as well. The trend is down, so we need to pay attention to that. Take a look at this blue box right in the middle of the black trend. We saw a significant rally higher. Let's just measure it for argument's sake. Inside the blue box, it went from the support low right around the 75 level all the way up here. So it went up about 120 pips before it found resistance at the black trend line and went down again. So let's measure today's movement. We can see it went up from the purple zone here. So we're going up about 115, 120 pips into the orange zone. So can it go up 100 pips and then turn back down? Well, there's your evidence right there. So we're looking at the black trend line. We're looking at the orange shaded area. We're looking at Fibonacci there. Fibonacci just from the black X, the last high there at the black X to the low puts the 382, 74.38. That's here at the bottom of the orange zone. So again, interesting area here at the orange shaded area. Historical support here as well. If it stays underneath it, we look for it to go back down. Only a break of that level do we look for a continuation higher? Zoom it in one time so you can see that a little bit better. Take a look at that. Support here acting as a resistance, Fibonacci there, trend line here. So I would say that here at the orange zone, it's a significant decision zone. Staying underneath it, potential to fall back down. Watch for clues to resistance and reversal. Look for candlestick formations, charting patterns, anything in here that implies that sellers are going to step back in, similar to what you saw here at the purple zone. Look at that, 1, 2, 3, 4 days, found resistance at the purple zone, then turned lower. Then it came back, tested it again, found lower. So again, doesn't have to be immediate, but we're looking at that orange zone as our resistance and reversal point to go back down in the direction of the trend for the Australian dollar. And lastly, moving over to the NZD USD, significant rally higher. We did get some news at the market open yesterday out of New Zealand, some retail sales data that caused this to pressure a little bit back higher because it was good positive data out of New Zealand with that retail sales news, a little bit of a buy. But look at this, past couple of weeks just stuck inside the yellow and green zone. So if you're looking for the buy, I think that's confirmed on the break of the yellow zone and the break of the black trend line. You have to wait for it to break there if you're going to confirm the reversal here for New Zealand. Otherwise, underneath it, we could be looking for it to stay in the trend, head back down towards the green zone. Of course, obviously, that's our support. And of course, a break of the green zone, we look for it to go lower. So I think at this point, if you're trading the trend, forget about the news for yesterday's retail news for a moment. If you're trading the trend, you're selling the yellow zone under the black trend line, targeting the green zone or lower for the New Zealand dollar. Now, if you're going to trade some of the news, the retail sales we have, you don't want to buy it right now because we're running into significant resistance. You want to wait for it to break that yellow zone to become your point of interest for buying the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.